Welcome to The Explainer. We spend so much time obsessing over what to invest in, right? Picking the perfect ETFs, finding the right funds. But today, we're going to prove that where you put your money actually matters just as much. And no, you absolutely do not need to be a CPA to figure this out. We're just going to run through a really simple framework to make sure you aren't accidentally handing your hard-earned compounding growth right back to the IRS. Let's get into it.
All right, here's our quick roadmap. We'll hit the wrong container cost, engines versus containers, exactly how these accounts are taxed, maximizing that 401k match, your first week action plan, and finally, 3 simple knowledge checks.
Section 1. The wrong container cost.
Okay, let's look at a super common beginner mistake through the story of an investor named Sophia. You see, Sophia actually did everything right at first. She learned the ropes and picked a fantastic low-cost index fund. But she just opened a standard taxable brokerage account. Fast forward 2 years, tax season rolls around, and bam, she gets hit with unexpected tax forms for dividends and capital gains. And the crazy part, she hadn't even sold a single share. She literally lost out on compounding growth just because she put the right investment into the completely wrong container.
Which brings us to Section 2, engines versus containers.
To really grasp why Sophia lost money, you just need this one mental model. Think of your actual investments, your ETFs, your index funds, as the engine of a car. But your account type, that's the road you're driving on. Look, you could have a Ferrari engine, but if you're driving it on a dirt road filled with potholes, you're going to struggle to build momentum. Taxes are literally the friction on that road. So choosing a good tax-advantaged account paves a smooth, fast highway for your money to travel on for decades.
All right, Section 3, how accounts are taxed. Let's break down the money flow, starting with a traditional IRA or a traditional 401k. Step 1, pre-tax money goes in. That means you get a sweet tax discount right now, today. Step 2, that money grows completely tax-free. Then, Step 3, the government finally takes their cut when you withdraw it in retirement. So basically, the deal here is you get a tax break today in exchange for paying taxes tomorrow.
Now let's flip that and look at the Roth IRA. Step 1 here is you put after-tax money in, so you've already paid Uncle Sam. Step 2, just like the traditional account, it grows completely tax-free. But Step 3, well, this is where the magic really happens. Because you pay taxes up front, you can potentially withdraw everything. We're talking decades of massive compounding growth, 100% tax-free in retirement.
So how do you actually choose between paying taxes today or paying them tomorrow? It really comes down to this. If you think your tax rate in retirement is going to be lower than it is right now, the traditional account makes a lot of sense. But if you're young, early in your career, or you expect to have a much higher income later on, the Roth is an absolute powerhouse. You're locking in today's low rate and shielding all that future growth from the IRS forever.
Now, what about that standard taxable brokerage account Sophia used? Well, it's not actually bad. It just doesn't have a tax shelter. It is your absolute go-to if you need total flexibility. Like maybe you're saving for a house down payment in the next 10 years, or maybe you've already completely maxed out your retirement accounts. It's a great tool, you just have to know it's more exposed to taxes along the way.
Moving on to Section 4, maximizing the 401k match.
Okay, imagine you start a new job, and HR says they'll match 3% of your salary if you put 3% into your 401k. Listen to me, that is free money. By grabbing that match, you are locking in a guaranteed 100% return before the market even does a single thing. Honestly, skipping the employer match is literally leaving free compensation on the table. It has to be your absolute highest priority.
Section 5, your first week action plan.
Let's turn all this theory into an actual game plan. This list right here is your compass. Priority number 1, always secure that free employer 401k match. Priority 2, funnel your remaining investment budget into tax-advantaged accounts like a Roth or traditional IRA to really protect your compounding. And then priority 3, once those tax-sheltered buckets are full, or if you need the cash for a medium-term goal, that's when you open the taxable brokerage account.
If you're feeling a bit overwhelmed, just run through this 7-day momentum checklist. Jot it down if you need to. Take it one day at a time. Day 1, pick your best fit. Day 2, check what HR offers. I really love Day 5. Just practice ignoring those complicated tax hacks you see online. You don't need them. Stick to these basics, and by Day 7, you'll have your account open and ready to go.
Finally, Section 6, 3 simple knowledge checks. Let's see what stuck.
Question 1. Think back to Sophia. What triggers investment taxes even if you never sell your shares? Remember, in a taxable account, it's those annual dividends and capital gains distributions. They can create a serious drag on your wealth-building engine.
Question 2. Which account type flips the script, letting you pay taxes today for tax-free growth and tax-free withdrawals decades from now? Yep, it's the Roth account. It is literally the ultimate container for protecting your future compounding.
And our last question, what is the very first place your investing dollars should go? You guessed it, the employer match. Never, ever leave that free compensation on the table. Let's wrap up with this final thought. Choose the container before you obsess over the contents. Getting your account type right is honestly one of the biggest, most invisible wins in all of personal finance. So I gotta ask, if you log into your investment accounts right now, are you confidently cruising on a freshly paved highway, or are you secretly paying the IRS to drive on a bumpy dirt road?